Hi there, welcome to Neppy Invest. The company I'm going to talk about today, Gascoyne Resources, is a company I originally bought into towards the middle or late May. The company released a fairly positive March quarter results. They were highly operating cash flow positive. In fact, they paid down debt by 19 million and they still had $27 million of cash on hand. Not only did they release a positive financial report, we also had seen the share price slowly creeping up. And when I see a share price slowly creeping up, that's the sort of company I want to own. It's a more sustainable, potentially more sustainable rally in the share price. Unfortunately, the company's management decided they didn't really want this positive news to last because they released three announcements during about a 3-week period. In all three announcements, the market reacted quite negatively to them, particularly a June 4th announcement in regards to the trading update of the company. And I'll talk about that trading update later in this video and why the market sold down Gascoyne shares by 20% on that day. Just the other day, June the 16th, then the company announced an acquisition or merger with another small cap gold producer company called Firefly. This looks like it is a strategic move from the company. However, again, the market hasn't reacted positively to it. On first glance, it does seem like Firefly shareholders are the ones who will be benefiting from this merger over Gascoyne shareholders. So before we get into why I bought and then sold Gascoyne Resources, just a bit of a brief history in regards to this company. This is the chart of Gascoyne going back to 2016. Even though the chart says Gascoyne's share price reached a high of $12 in 2016, that's a little bit skewed because the company has done a 20-for-1 share consolidation. So just divide that $12 by 20, and that is actually the price at that point in time. Share price did fall from then, that reaching a high of 12, all the way to 2018 when the share price was about 9. And then it fell rapidly from that share price of 9 to a low of 30 cents towards the start of 2019. The company was experiencing problems, and I will show you the half-yearly financial results in 2019. And I'll show you what or why I would have been keen to buy into Gascoyne at that point in time. On June 3rd, 2019, Gascoyne announced they were going into voluntary administration. And the reason behind that was because the company was going to incur a material cash flow shortfall in the short term. That period of suspended animation in trading lasted from June until about, I think it was October 2020. But it was on 13th of August 2020 that the company announced a $125 million funding package to save the company. They're going to do a capital raising at 2.5 cents. This was pre this share consolidation. And that $125 million of funding was through two ways. So $85 million through the capital raising, issuing 3.4 billion shares. And they were also going to get $40 million from a 3-year debt facility. Also, they announced a 20-for-1 share consolidation at that point in time, or when they were going to start trading again. So the shares on issue would have decreased from 4 billion to 250 million. Initially, the market didn't react all that well to this, or two shares started to trade again, but we did see the shares start to go up very slowly towards the start of 2021. I'm just going to touch upon the half-year results they released in February 2019, only about 4 months before they went into administration. When I look at this, there is a few red flags here that would not lead me to take a position in the company. Total current liabilities were 59.4 million, which were significantly higher than total current assets. It's not something you want to see. You want to see current assets to be higher than current liabilities. They had $25.8 million of current borrowings and $44.5 million of non-current borrowings. So they had about $70 million of loans, and the equity over this period, so this was a 12-month period, had fallen from 116.5 million to 92.7 million. You really want to see total equity increase through time, not decrease through time. Onto the half-yearly cash flow statement in February 2019. A few things to point out here. Even though they did receive $41.7 million in receipts for the half year, they were only operational cash flow positive $5.6 million. Sometimes that's all I need to look at, but you do have to go to the net cash used in investing activities and the cash flows from financing activities. It's very important because Gascoyne paid or spent $37.8 million on payments for property, plant, and equipment. That is capital expenditure. So even though they were operational cash flow positive by over $5 million, they were investing cash flow negative by 35.4 billion. They did raise cash in that half year. That was 24.2. So that did help their situation, because if they didn't raise that cash, since they finished the half year with only $15.7 million, that means they would have been running out of cash. So this again was a red flag for me when I look at the financial state of Gascoyne at this point in time. And then only 4 months later, the company went into voluntary administration. And sometimes it's not to be good holding on to a company that is in voluntary administration, particularly if they're trying to work their way through it, because any shareholders of Gascoyne at this point in time could not sell their shares and had to wait 14 months before they saw any signs that there could be light at the end of the tunnel. And that was that $125 million funding package, which I've already talked about. So there was light at the end of the tunnel. This looked good. This was a saving grace for the company, and it did look like the administrations had turned things around for the company. And to further show the administrations had turned around the company, I just want to look at the half-yearly results from February 2021 now and see how well these financial statements had improved over that 2-year period because of this huge funding package. Current liabilities for borrowings was only $16.8 million, and non-current liabilities were $35.5. However, they had raised a lot of cash, so the total equity had increased from $57 million to $179 million, mainly because of this $125 million funding package. So that funding package saved this company in the end. Not only did the administrators turn the company around through this $125 million funding package, they also turned the operations around in this company. And you can see that quite clearly in the cash flow statement from the half-year report in February 2021. Receipts had exploded from 30 odd million to 109.6 million. Operational cash flow positive for this half year of 37.3 million, improving from 5 odd million 2 years previous to this. And even though they did spend $35.9 million on capital expenditure, so they were still spending a lot of money on that, they did receive $85 million from the issue of shares, $40 million from the proceeds from borrowings, which meant they could also repay $83.4 million of borrowings. So they did have cash at the end of this half year of $37.3 million. So they definitely had turned things around by the end of the half year in December 2020. But at this point in time, I still hadn't taken position in the company. I wanted some more proof that they had turned things around. So I wanted to wait to the March quarter results that were released in April. It was this March quarter results that did give me the impetus to buy or take a position in Gascoyne. $47.9 million in receipts, and there were operational cash flow positive of $28 million for the quarter. So if they could continue things going for the next few quarters, next few years, this company was going to be drowning in cash in that time period. Even though they were highly operational cash flow, they did still spend $17.6 million on capital expenditure. They also paid down debt by $17.5 million. So cash decreased from $37 million to $27 million for the quarter. However, things were looking quite positive for this company, and that's the main reason I took a position in Gascoyne just after the release of these results. I included Gascoyne in a video I did towards the end of May, and this was the chart I used in that video. You can see a nice looking upwards trend, slowly going upwards. At that point in time, the market cap of Gascoyne was 147 million. Revenue 209 million and operating cash flow 75 million. So things were looking good just by looking at this chart. Nice uptrend. The financial state of the company was improving. And that's the two reasons I bought into Gascoyne towards the end of May. Unfortunately, the good times for Gascoyne share price and its shareholders did not continue. This is the updated chart to the end of trading on the 18th of June. We have seen the share price go from a high of 64 cents to a low of 30 cents. So a massive drop of 50% in about 3 weeks of trading. And the first sign of bad news coming through was on the 31st of May when Gascoyne released their 2021 mineral resource and ore reserve statements. Share price went down 13% on that day and then just leveled off over the next 3 trading days. I did think at that point in time the market slightly overreacted, so I did not sell out at that point. But when they released on the 4th of June their financial year 21 and financial year 22 guidance update, I immediately sold out because there was something in there I did not like, and the market did not like that either. Share price went down 19.4%. I sold out at 47 cents, and the share price has just kept on dropping since then. They announced the merger with Firefly on the 16th of June. I'll just talk about this merger right now. The market has reacted negatively to this merger for Gascoyne, but positively for Firefly. Shares on issue of the merged group will increase. Gascoyne has 250 million shares now, so it'll increase to 372.3 million. The contained gold for the merged group will increase from 1,186,000 ounces to 1,382,000 ounces. So not a large increase. So Firefly does not have a lot of gold, but they definitely have higher quality gold than Gascoyne. And I do think this was a strategic play by Gascoyne management to get that high quality gold from Firefly. And I do think at this point in time, the market cap, if we calculate that, I've said it's 81.5 million here, but if we base it off the share price of around 30 cents and shares on issue for the merged group, which is 372, that would mean the market cap of the merged group will be about 110 to 120 million. The main reason I decided to sell out of Gascoyne when they released their financial year 21 and 22 guidance was in relation to their all-in sustaining cost, AISC. This is just the amount of money they have to spend to dig the gold out of the ground. So you want this number to be as low as possible. You don't want it to be very high. And when I saw their financial year 22 guidance, that really shocked me, and that was the reason I decided to sell. So for the March financial year 21 quarter, they were only spending $1,114 per ounce to get that gold out of the ground. And in fact, when they gave the financial year 21 guidance in the half yearly, they were expecting their AISC to be between 1,200 and 13. They revised that on the 4th of June to between 1,275 to 1,325. So maybe a slight increase in the AISC for the financial year. However, when they gave that financial year 22 guidance of between $1,600 and $1,700, it spooked me, and more likely it spooked the market as well, and that's why the share price fell 20% on that day. That is all I've got for this video on Gascoyne, why I bought into the company and then subsequently sold out a few weeks later. I do think a lot of investors have problems about selling out of a company they recently bought into, particularly if the share price has fallen. A lot of investors don't like to sell at a loss. I don't have that problem because I always have a plan for a company, and if that plan falls apart, that is a sell for me, and then I just go on to the next thing, and hopefully the share price of the next company I buy into will increase and not fall. It's worked for Gascoyne because the share price has decreased from 47 cents when I sold to a current share price of 33 cents. And maybe I'll take a position in the company if they can turn things around in the next year or so. If you have any questions about this company or any other company on the ASX, leave it in the comment section. I'll answer anything you have to say in time. The last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.